It's another day with another mega software IPO seeing its shares soar into outer orbit. This time, it's video game backer Unity. It's a software company surging around 30% right now above its initial price. This thing's at $69 as I speak. Unlike the other high-flying IPOs this week, they're letting some of their investors cash in on this run-up. Former and current employees can sell up to 15% of their vested shares today, guys, which, you know, Dom, I think is a great move. I don't know why more companies don't allow for it. And by the way, it's certainly not hurting the performance of the stock today, despite what a down market we're in.
So it's interesting only because you talk about this idea that there are so many folks out there who have a vested interest and they're looking for this liquidity event. Oftentimes, you don't want to see employees selling some of this stock because it doesn't really sell well, right? You can't tell a story that, hey, we want you to invest in this company because it's got a great long-term future, yet you don't have some of your employees wanting to stick around for that long term. So, yes, I think it's nice here, but, you know, as an investor, you might want to see these folks rather keep their shares at least a little bit here.
Mike, in my old age, I've come to realize a lot of these employees, they don't make a lot of money on these startups right away. A lot of their wealth might be tied up in the stock. They might need to buy a house or something, and this is a chance to do it.
Sure. And I think it also is a reminder of a couple of things. One, IPOs are largely liquidity events for insiders. Let's not pretend it's all about raising capital and growing the business. Certainly, it's part of it. But also that a lot of these rules, such as lockup agreements that we normally see in an IPO, it's a reminder that they're just kind of customs and habits and protocols. They're not rules. There's no one way to do these things. If there's enough demand for the business, to people to own the business, they don't necessarily have to see these employees who've been compensated in the equity hang on and actually pray for 6 months that the stock holds together before they sell.
Right, exactly. And that 6-month time is often among the weakest when they put out their first earnings report or two and people go, oh, my gosh, wait, they don't make any money. Mike, I also want to ask, while we're comparing the IPO performance to the other software names, can you talk about why this continues to do so well in a market that is throwing out all the big cap tech names with the bathwater?
Yeah, it is. I mean, I think there's still a craving for the next new thing to play the dominant long-term themes. So everyone seems to agree on those dominant themes, whether it's cloud-based software or gaming, and also the fast way that companies can now scale in these areas. We already kind of know the big dominant players, and we believe in their franchises, but they're not really about growth and capitalizing on things on an early stage. So that would be my guess. I think people have visions of the next Shopify in their minds, essentially.
And I like that chart we were just showing that the IPO ETF is up about 2.5% today, while tech broadly is down about 1.5%. So that's some pretty significant outperformance.